everyone and welcome back to the channel. In this video, Mark Moss shares his perspectives on navigating the complexities of wealth building in the context of Bitcoin investments. Engaging in a candid exchange, Mark explores the importance of adopting a long-term mindset and cultivating valuable skills for financial success. Drawing from personal experiences and reflections, he delves into the nuances of leveraging Bitcoin assets, managing risks, and prioritizing life goals over mere accumulation of wealth. Through practical insights and thought-provoking anecdotes, Mark invites listeners to reconsider their approach to finance and embrace a holistic view that emphasizes both financial growth and personal fulfillment.
Yeah, and it's kind of like, it's like trying to get people into that game mindset. And I think I think about it a lot at the moment, Mark, because again, Bitcoin's going up again, and some people are going to see £100,000, $100,000. They think, too late. I can't get involved,
right?
Yada yada, because they think about, again, entry price and exit price, rather than entry and no exit.
Right.
And that mindset, trying to help people understand that why the entry price doesn't really matter. You just got to get in, and why you've got to be patient, and why you've got to build. Because the truth is, the reality is, when did you first start working for yourself properly? Like, forget, is it like, did you have jobs? Did you have employers when you were first like 18 to 20? 22?
I'm technically unemployable. I've had one job in my whole life besides working for my dad. And when I was a senior in high school, I started working for my friend's dad's company, just sweeping floors part-time. There was 2 people that worked there, never filled out a job resume, just started working there after high school. During high school. And right after I graduated, I started just full-time. And I quit shortly after starting my own business, and I've never had another job.
All right, but I could imagine that over time you've had the benefit of the compound growth.
Yeah, continue to add more skills.
Yeah, and like the last 5 to 10 years have been infinitely easier than the first 5 to 10.
Sure, because I've got more skills and I'm more experience. Yeah.
But that takes time, and that takes effort, that takes energy. Like, it's hard to do that, and most people are just still trapped on that, hamster wheel. They're still thinking, if I could just earn this little bit more from my boss, I could get this slightly bigger house and have
which is why I want to bring this up, because those people have the wrong thought process of the game that we're playing. So the way that you make quantum leaps is not by just trying to provide a little bit extra to your boss or work an extra couple hours per week. It's about adding new skills that can take you to the next level. Because life is a game of levels, if you will, right? I could go down a whole tangent on that. I don't want to do that. But let's go back to the game. The other mechanism in the game is taxes. So that takes a lot of our wealth. And then we have the players in the game, as I said, Wall Street, the government. We also have bankers. Okay, so first of all, we're all Bitcoiners. We're trying to change the system. We don't want this inflationary system. We don't want fiat currency. We don't want the banking system as we have, but it is what we have today. That's the game that we're in. So I think for us, we're simultaneously trying to build the new game, but we're stuck playing the game that we're in as well. So if you think about it, like I remember as a kid growing up, my parents were like, oh, I wish, I don't have a money tree in the backyard. What do you think? I have a money tree. Well, we do all have a money tree. Every one of us does, because we're in a debt-based monetary system. And that means that money is created through debt, right? We talk about the Federal Reserve, let the printers go burr, like that's not how it works, right? So money is created through debt issuance. And so anyone can, well, not anyone, but if you have built up enough skill set and mental capacity and relationships, I can go to the bank right now and get $1 million to buy a business, or go buy $1 million apartment complex. They can just give me that money through debt issuance. And so then we have to understand that in order to play this game of money, if the goal is to get assets, then I need to use the mechanism of the game, which would include debt. And then the other reason why we want to understand that debt is because the biggest loss that we have, besides inflation, or bigger than inflation, is taxes. And by using debt, we can get around taxes.
Okay.
All right. So those are sort of like the mechanisms of the game. But I think you wanted to talk specifically about the long-term vision of Bitcoin and the entry places and the exit places.
Well, no, it's just like I say, I made the mistake myself. I first made my gains in Bitcoin. I was like thinking, I could sell and do this. And there are certain points I've sold Bitcoin. It's only over time that I've kind of like slowly started to realize.
But let's reframe what you just said.
Let me tell you why I think it's this. It's because I don't think the goal is what people think the goal is. I think it's a myth. People want to get rich, and I don't think they do. They think they do, but actually what you want is you want time. You want to buy time and freedom. like the breathing space for choices to do what the fuck you want. And I think that's why you're trying to build this, because if you only care about material things like houses, cars, planes, you're always chasing it. But once you can get to your escape velocity of time, you've got everything you really want. And I think rich is a myth.
Yes, and let me go back to one thing you said. One was like selling Bitcoin. So that you think about selling it for dollars. So you talked about selling it to get a car.
Yes.
We were talking before we started recording. I sold it to get a house.
Yeah, I've done the same. Yeah.
You sold it to get a house too. I didn't sell it to get a house. I traded it for a house.
There you go. Okay.
And that's a big difference. And the reason why is because we don't want money. We want the things that money gets us. Money is a means to an end. So we're trying to get to the end, right? And so like I'll exchange my Bitcoin for other things maybe at some point, right? We have both done that, but I'm not selling it for dollars. And I think that's the big difference. At what price will you sell? I won't. Maybe I'll exchange them for other things in the future. But right now I'm going to continue earning in dollars, and I'm going to continue to use those dollars. I think of the one thing that I use to reframe this just for myself, and it's semantics, but I think about earning my wealth through my businesses and then deploying those into assets. But I think about those assets as savings, not investing.
Okay.
So I save in Bitcoin and I save in real estate.
Yeah, fair.
And the reason why I think about it like that is because I think about it long term, like the infinite game. Like I'm building this new house in Mexico right on the beach right now. And like, I want my grandkids to grow up in that house long after I'm gone. And so that's where my wealth is going to be saved, and that hopefully will go down through multiple generations of me. And so it's not an investment. And since I bought it, that area is blowing up, and I'm not super happy about it because I kind of want to be out sort of on my own a little bit. And everyone out there is like, but Mark, look how much your property value has gone up. I'm like, I don't care, because my goal was never to sell it in the first place. So anyway, I think about it as savings, and that's sort of that long-term game, if you will, right? So if we're doing that, then we talk about like purchasing, increasing your purchasing power, like a store of value. But I would just think about it as like long-term, lock it up in savings. Then it leads us to the next piece. So if we're using Bitcoin as a way to store wealth in this game, in this game of money, if you will, then what happens if we do want to get the house, or we do want to get the Lambo, or take a vacation, or whatever it is, right? So in the game of money, one of the biggest ways we lose our wealth as we're trying to build it, the game has the mechanisms of inflation and taxes that take our wealth, taxes. Now, depends on where you're at in the world, or what state you're at in the United States, and how much income you make. But in California, as a top tier income earner, half of your wealth goes to tax, half.
Yep.
So let's say that I do buy the Bitcoin for $100,000 and it goes to $200,000. Right now, it's been averaging a 200% compounded annual growth rate. Michael Saylor's leading the speculative attack, leading the classic textbook example of how to use a weak currency to buy an appreciating currency. He's borrowing at 0.6 and buying a 200% compounded growth rate asset. So obviously, I believe that goes down. Most people agree that that will go down over time. As the asset gets bigger, the volatility will go down and the asset appreciation will go down as well. And maybe over a 20-year period, that drops to 30%.
Still not bad.
Still amazing, right?
Yeah.
So over this long period, I have this calculator that I've built that I have all this worked out. And so let's say that it goes down to 30%. Well, what happens is if I have this Bitcoin that I want to now get the Lambo, get the beach house, or whatever that you want, I have two options, right? So I bought it at 100,000, it's worth 200,000 now. If I want the $50,000 to go buy whatever it is, I can sell the Bitcoin, the $200,000 worth of Bitcoin, pay half of it to the government, which
You don't have half capital gains tax here, do you?
In less than a year. I mean, less than 12 months is ordinary income.
Sorry?
It's taxed as ordinary income. So capital gains, you have long-term and short-term.
Yeah.
So if you hold it for less than a year, it's short-term capital gains, which is taxed the same as ordinary
Okay,
income.
but over 1 year.
Over 1 year, then it reduces down, and it depends on what state you're in. So you have federal and you have state, and then there's different tiers.
Yeah, we're 20% in the UK about.
Yeah, so we have federal and state. So depending on, like I said, what state you're in and what tier, but it could be like 25%.
But I think most people will be more than 1 year. I think you're better off using those numbers. So it's not 50%, but I get like the point's the same, but it's like
So this is just framework to think about things, right? And that's really the key piece. Even what we went off on a tangent on about the favors. These are just different ways, different mental models I use to like kind of look at the world and try to understand things from a different angle.
Yeah.
None of these are like conclusive. This is the only way you can think about the world, right? They're just like sort of models and frameworks. So back to the tax situation. Yes, of course, as I already said, depending on what country you're in, depending on what tax bracket you're in, what state you're in, these numbers change.
Yeah.
I like to use round numbers because it's just easier to understand as we go through this. Right. So anyway, so I sell the asset.
Yeah.
And I pay the tax, and I have what's left over. Now, there's a whole bunch we can dig into there. I will just say that I object to what my tax dollars go to, and I certainly do not want to contribute any more than I'm legally required to contribute. So I think it's in all of our best interest to get that number as low as we possibly can legally. And so I can pay those tax dollars, and then I have whatever I have left over, and I can go buy whatever I need. The problem is I no longer have the Bitcoin for the capital appreciation. So option 2 is I can borrow against that Bitcoin, which now is debt against the Bitcoin, because remember, the mechanism in the game is debt. I'm using debt, which means I owe no tax on the Bitcoin now. I can buy whatever the thing is that I wanted to buy, and I still have the Bitcoin for the continued capital appreciation on that.
And there's 2 options. You pay off that debt over time with your cash flow, or as potentially happening with Bitcoin, some people are just going to, because of the appreciation of Bitcoin, they're just going to let those loans roll over and over. Yeah.
So in that, I have a whole book that I've written that I haven't published. It'll probably maybe come out by the time this interview comes out. And I have a calculator linked. I don't know if you guys saw the calculator.
We did,
but basically, this is based off of assumptions of, one, where Bitcoin has come. So that's the history, but more assumptions as to where it will go in the future. And so we can talk about where we think Bitcoin goes in the future. Is it $1 million by 2030? Is it $1 billion by 2048, like some would say. And as I said, the way that I've sort of projected it was probably dropping down to about a 30% compounded annual growth rate. We also know that Bitcoin has sort of had this pattern, like a 4-year cycle pattern. So I kind of accounted for appreciation as well as depreciation in that 4th year. And there's no guarantees in life, but theoretically, if it followed a similar path, you could put in about 100,000 today, wait about 5 years, and you could leverage it with about 10% of debt. Now, the thing with debt that you have to understand is that we're in a debt-based system, so we need to use debt in order to get wealthy. The problem is debt is very dangerous to use. You wouldn't let your little kid play with fire because they could burn your house down. But we use fire to heat our house or cook our food, but it could also burn the house down. So you don't let little kids play with it. But hopefully, as we become adults, we're smart enough and responsible enough to use that debt or that fire. Debt is like the same thing. And so the Dave Ramseys of the world are out there like, never use debt, don't use debt. A lot of Bitcoiners are like, don't use debt, don't use debt. And that's right for about 90% of the people because they're just not smart enough to know how to use it.
Where does it go wrong?
Where does it go wrong is that, again, the leverage could burn your house down, right? So where it goes wrong is when you can't afford to carry the debt.
So if you, for example, borrowed against 50% of your Bitcoin and Bitcoin does an 80% drop, you're going to be liquidated and you're screwed.
Yep.
But if
I can make the monthly payments, I don't get liquidated.
Yeah.
Right? If I borrow, let's take that out of the equation. This is what happened to me in 2008. I got wiped out. I had a whole bunch of real estate. And when the market crashed, I couldn't afford the monthly payments to carry it. And so I had to short sell some and let some go back to the bank, right? I couldn't afford to carry it. So the same thing, right? So if I borrow against the Bitcoin and I, for whatever reason, can't afford to carry that, then I lose it. Or, and to the point you're talking about, it goes down and I can't cover a margin call, right? So that would be the risk. So let's talk about that. Because what we always want to do is we always want to plan for that risk, right? Mm-hmm. So I like to think like, what's the worst that can happen? And am I okay with that happening? That's sort of my bottom line risk management. So for example, for using round numbers, and again, this depends on where you live in tax bracket, but let's just say for easy numbers that I sell $150,000 with Bitcoin, I have to pay 50% tax, and I end up with $70,000, $75,000. Okay. So I have 75 grand and I no longer have the Bitcoin. Option 2, I keep the Bitcoin and I have $75,000 cash because I have debt against it. Now let's say that I lose the Bitcoin. It drops by 80%. I get margin called. I can't cover it and I can't cover the payments. And so they liquidate me. Am I worse off than I would have been if I would have sold it in the first place?
You're probably slightly better off.
Probably slightly better
because
off.
they're not going to liquidate the whole of the Bitcoin.
They're not going to liquidate the whole thing. And I probably would have had some appreciation maybe somewhere along the line.
But that's only the scenario of a 50% tax. You have to
play with these numbers for wherever you're at. I can't plan this for everybody in the world.
Yeah, but I think somebody might listen to that and they live in an unrealistic place. I think
but
I'd go 25% is a better number to work with.
Okay, well, first of all, in the calculator I put together, I only said 10%.
Yeah, good.
So I was only borrowing 10% of the stack.
10% of the dollar value.
10% of the dollar value of the stack.
Yeah.
So historically, we've seen some 90% drawdowns, but as the volatility continues to decrease, those drawdowns are getting less and less and less.
Yeah.
So, maybe we'd see a 70% drawdown. To get to a 90% drawdown again, especially with ETFs in the market today, is possible. It's not highly probable, I would think. But everyone has to assess their own risk for themselves. So I only said borrow 10%. If you think a 90% is very highly probable, then only borrow 5%. Borrow 2%. Everyone has to figure this out on their own, right? But the point is that using round numbers of 50%, right? If I borrowed 50% and I sold it, I'm actually probably better off if I borrowed against it and ended up losing it, got liquidated that way, right? And so that's what I think about in risk management. Now, again, I'm recommending a 10% borrow. So you'd have to have over a 90% drawdown. And even if I had a 90% drawdown, all it would do is liquidate a little bit and it would just make my loan to value change. But here's the thing. And I'm going to admit this for the first time publicly. I did borrow against some of my Bitcoin and I did get liquidated on some of it.
Oh, you did?
But I ended up with the asset that I really wanted. And that's more important to me than any amount of money that I had.
Yeah, I get it. Okay.
So I did. I bought a house. I borrowed against some of it and I got liquidated on part of that. But I bought a house and it was a home for my kids. And that's worth more to me than any amount of money in the world.
And do you know the mistake I made? I sold my Bitcoin for my house. I could have borrowed against it. I wouldn't have got liquidated because the price is up. And now I could have essentially done the thing where I draw down some of the Bitcoin back because my LTV's too high.
Yeah. Now, everyone...
But I would have won in either. The only situation I lost is the one that I did, which is selling the Bitcoin. Yeah.
And I think everybody's in a different situation. And so you talked about the plebs earlier. Yeah. And so a lot of the plebs are 100% in, Richard, sell your chairs kind of a thing, right? And we should buy nothing but Bitcoin, 100% in, YOLO, whatever. And that's fine when you have $1,000 to your name. When you have more money, you don't put 100% of your money in. I know both of us have been to Michael Saylor's house. He has multiple houses, and not just houses, he has yachts, and not just one yacht, he has multiple yachts.
His smallest yacht is bigger than my house.
And then he's got bigger yachts.
Yeah.
And he's got a business that throws up $30 million of cash flow a year. And he's got you have other assets. And so did I give up some of my Bitcoin to get the thing that I really wanted? I did. But I still have plenty of Bitcoin and I still have lots of other assets. And what I really wanted, you said earlier, the money is a means to an end. What we really want is time. Freedom. For me, experiences, time and freedom, right? And what I got in exchange was what I ultimately wanted money for in the first place. So people are going to buy Bitcoin because one day they can get what they want. I did. I got what I wanted.
From this conversation, we learned the value of adopting a game-oriented mindset in managing wealth. It teaches us to view life as a series of levels to conquer and skills to acquire, fostering patience and resilience crucial for navigating financial markets. Emphasizing the long-term perspective over short-term gains, this approach encourages strategic decision-making and purpose-driven wealth accumulation. Moreover, we learned about the strategic use of debt and leverage in wealth management, challenging conventional wisdom. Instead of shunning debt entirely, the conversation advocates for its judicious application to amplify returns and mitigate tax liabilities, especially in Bitcoin investments. Leveraging debt intelligently can optimize financial strategies and unlock opportunities for wealth growth while minimizing risk exposure. Ultimately, the conversation highlights the importance of aligning financial decisions with personal values and aspirations. It reminds us to prioritize experiences, relationships, and societal contributions over mere accumulation of wealth. By viewing wealth as a means to achieve time freedom and fulfillment, individuals can lead richer, more meaningful lives while pursuing their financial goals. So what do you think about this conversation? Do you agree with Mark's arguments and point of view? Also, did you learn anything new from this interesting conversation? Let us know in the comment section below. If you enjoy this type of content and want to see more, make sure to give this video a like and subscribe to our channel. Until next time, keep learning and keep stacking.